U.S. is back to leadership process technology being manufactured on our shores for the first time in a decade.
Intel's story over the last several years, and this is the Pat Gelsinger year, has been one of dashed expectations from outlandishly bullish targets to key product delays to rampant channel stuffing, leading to an eventual abject collapse. I think you want to steer clear of this. And Stacy represents the now conventional wisdom, but he's willing to tell the truth, which is that Gelsinger is just simply one of the most suboptimal CEOs we've seen in some time.
Is he on the wall?
Yeah.
He is?
Yeah, I got to put him on the wall.
Really?
Yeah, I think I have to. I mean, this is an extraordinary moment where they just stopped caring after making incredible claims.
Pat, let's end on AI accelerators. Gaudi is on track for 500 million this year. AMD's MI300X will probably do 3.5 billion, and nvidia with its generations will do 40 billion. You've said that choice is important and also the CPU is important, and I accept that, many share it. But do you see a clear path where the numbers I just outlined rebalance in your favor?
Intel is one of the worst performing stock of the S&P 500, and their stock has been down 39% year to date. They are heavily losing the AI battle to nvidia. Soon, PCs are likely to be shipped without Intel chips because they are losing this battle as well to Qualcomm and ARM. And finally, one of their acquisitions was recently rejected by the Chinese government. Seems like Intel is losing everything at this moment. And as one of the US presidents says, we keep losing, in the case of Intel. What do you think of all this?
So this is very bad for Intel. We've made so many videos about NVIDIA, AI, semiconductors, TSMC on our channel. And one of the recurring themes of these videos is that Intel is always the biggest loser in all these stories. And we can actually see it in how the stock is performing and how their financials look.
Let's dive into the financials, their last Q1 earnings that they did a few weeks ago. Yeah, so regarding their financials, this is the first quarter earnings presentation of Intel. And here what you can see is their revenue that you see there, which is $12.7 billion for the Q1. And here what analysts predicted. And the gross margin is 45.1%. And the earning per share is 0.18. So in terms of their revenue, you can see how their Q1 2023 revenue compares to Q1 2024. So 11.7 billion to 12.7, 1 billion more. The gross margin is also higher from 38.4 to 45.1. If you see this, you will say, wow, things are going great for Intel. So why are people complaining, or why are investors, mad? Now, if you continue further, this is the breakdown of their Intel product revenue and the operating income as well. Things are also looking good here. And this is a further breakdown. This is, I think, the most important bit. So for people that don't know, in 2021, Intel changed their business model by splitting the company into two, Intel Foundry and then Intel Product Services. So we looked at their product services before, which basically design Intel chips and then sell it to their customers, while the Foundry here just manufacture chips for both Intel's kind of products, so internally in-house, and then also for external customers. And here they are losing heavily. And you can see that Q1 revenue is 4.8 in 2023, and now is 4.4. And the loss in terms of operating income is 56.6%. Is there any thought?
Yeah, you can see from the graph here that not only are they losing, but they are losing more, right? If you compare the loss from Q4 2023 to Q1 2024, they almost double the loss. It went from 1.3 billion to 2.5 billion. So you have to think of it this way. Intel is trying to start a new business inside its bigger conglomerate, right? It's always very difficult to start a new business. And Intel has a lot of competition that's ahead of the game. First of all, having engineers and people who are qualified qualified to design and manufacture these chips is already very difficult to find those people. And you need to have the fabrication labs well set and have the workers in there to get everything working. If you've been following this story, the US government has poured money into all these fab manufacturers, and it has just been a very difficult endeavor for all of them to set up shop in the US. That's what the numbers are reflecting here. And if your cost of production and running your business is going to be more expensive to do in the US compared to China or Taiwan or anywhere else, how are you going to be profitable? That's one of the things that is also affecting Intel. On top of that, you have other competitors like TSMC, Samsung, SMCI from China that are heavily competing against Intel in this market. All this is culminating to all this heavy loss that the Intel company is going through.
I totally agree with you. And to add on what you say, I would say that this also links very well to what Intel has done, I would say, in the past. The fact that they split the business into two is great, but at the same time shows their weakness, which is the engineering side of Intel, in which they haven't invested a lot in the past decades because they've been focusing on brand and they've lost their competitive advantage that they had back in the 80s and the 90s. This shows that really well. So there is a point that you made there that is actually quite important, which is the fact that the government has been putting a lot of money into Intel and all the chip manufacturers. So here we can see that in total, Intel is planning to draw around 50 billion from government in the US, in Europe, and from other financial partners. And really for the US one is mainly the Chip and Science Act that's going to be allocating or has already allocated around 8.5 billion to Intel so that they invest directly in their chip manufacturing. And they are also set to receive 11 billion of low interest loan for the construction of their fabs in Arizona, New Mexico, Ohio, and Oregon. And also they are benefiting from a lot of incentives around taxes and stuff from some states in the US as well. And in the EU is mainly the European Chips Act that's going to give them 6.8 billion. So this is like a lot of money that they are going to be getting to build their fabs. But again, as you said, we have TSMC there that has these things in place years ago. And while Intel is building this thing, TSMC is making money already. Their operating margin is around 40%, while Intel's Foundry is losing 56%
Right.
of their revenue, which is mad.
It's going to be a tough road ahead for Intel because they've been on this path for a while now. It's not looking like they are succeeding.
I wanted to jump on their Foundry outlook, which is the part that investor didn't like,
Right.
because there was a lack of clarity in terms of their projections, and the investor didn't like this. That's the main reason why their stock dropped again after the earnings. This is the chart that they presented, and what you can see here is that they are expecting to have a margin improvement. So the wide return on invested capital that you see in 2023 here is below 2023, meaning is negative, and they are expecting the Foundry to become break-even between 2023 and 2030, which is like a big kind of range. What year is it going to be? 2024, 2025, 2029? Nobody knows. So they're expecting the Foundry to break even midpoint, and then in 2030 they're expecting the Foundry to start making money, and here they're expecting it to make around 30%, which is again lower than what TSMC is making now, which is 47%. It's just sad, man.
It's sad, but it's going to get worse. It's going to get worse for them. Yeah, the foundry business going to be tough to compete. China is ramping up as well with SMIC. They are trying to focus on older generation chips because the US government is blocking them from making progress in the new generation chips like AI chips and stuff like that. Competition is fierce, but the foundry is not the only place where Intel is losing money. Another place where Intel is losing money is the other business they have acquired. One of them is Altera. Altera is a manufacturer of FPGAs, which are used for programming chips that goes into cars, planes, and all sort of things. And based on their last quarter, they told us that Altera's revenue is down by almost 50%. And the reason they gave was that the clients were slowing down on putting in order for Altera product. The same thing is happening to another product that they have, which is called Mobile Eye, which plays more into the autonomous driving. And even here, Mobile Eye is also losing quite a lot of money. You can expand on that.
Yeah, I mean, what I would say is that I'm not too worried about Altera and Mobileye because they represent less than 10%. I think even if you put them together, they will represent around 10% of the whole Intel business. Yeah, I wouldn't stress too much on them. For me, I think the Foundry is the main issue.
Is a main issue. Well, there's more for them to lose. So if you've been paying attention at what has been happening in the chip market, the computing market, the AI market, 2 weeks before, the Microsoft came out with Copilot Plus PCs. And these are PCs that are no longer going to run on Intel x86 architecture. Any Intel processor runs on this architecture called x86. And even AMD processors run on this same architecture. Now, because of AI, OpenAI, ChatGPT, and all these things, and LLMs, a lot of companies are trying to make a new product segment in the PC market. And all these PCs are now going to be augmented with some kind of AI capability. So due to this, Microsoft has been making effort to step away a little bit from Intel, have more performant processors, and go and really compete with the MacBook products from Apple. So if you know anything about what is going on at Apple as well, Apple has been really doing well with their Mac business. If you look at their last quarter, only the Mac segment revenue was up compared to iPhone and any other segment in the Apple business. And the reason for this is that these Macs have become really good with the M1, M2, M3 chips that were produced in-house by Apple based on the ARM architecture. These Macs, I'm using one myself, have very performant batteries. They last for hours, if not days, depending on what you're doing. So Microsoft is looking at this and being like, okay, if we don't stop this, everybody is going to start using a Mac and they are going to stop buying PCs. So they partnered with Qualcomm, and Qualcomm is coming out with a very performant chip, which is very close to the same performance as the M3 Apple silicon chip. The name of the chip is X Elite Snapdragon. And this is going to be the chip that will go into the new Copilot Plus PC. The moment this happens, people are going to maybe start buying these PCs instead of Intel PCs. One thing with these new processors, they are good on performance. That means they are fast. They consume less battery. The only drawback right now, which is a big one as well, is that people are skeptical that Microsoft can deliver. Because in order from a software to run an 86 architecture and move that same software into an ARM-based architecture, you have to write emulator, some kind of software that can trick the processor that is running on the same old architecture, but is running on a different architecture. So not all softwares are going to be compatible in this first version, but the good thing about software is that you can improve it quickly. So everything is now going to rely on Microsoft to deliver, and then Intel is done for. They are going to lose the personal PC market as well.
What I would argue is that the PC market is already going down in terms of PC units that are shipped every single year, which is not a good thing for Intel. And beside that, the way we use PCs has changed a lot for like personal use, because our TVs are smart now. We are using a lot of iPad and using a lot of iPhones and things like that. So on the PC side, I think the business or the corporate or the B2B element, I think, is the most important one. So if that part were to switch to the new PCs with the new chips, I think that will be the problem. But bottom line is that Intel right now, they are a PC reliant company. Their revenue mainly come from PC related chips that are around 58% of their revenue.
Right.
And if they don't really get their act right in terms of diversifying and leveraging a new opportunity or going more into AI or another opportunity, they are going to be in big trouble. So the question I'm going to ask you now is, what's your thought on the stock? Would you buy it now, or do you own it even now? And how do you see this stock or the company itself going?
There is more pain ahead for Intel. I'm not going to bet on this stock. The reason why is that it's not just the PC. Like you said, most of the PC market is going to be corporate. Companies are buying PCs for their employees. And one thing I learned today is that these new PCs are actually cheaper than the Intel PCs. If these PCs are going to save money to companies, they are definitely going to buy them. right? And
Yeah.
not only that, Qualcomm is not only targeting the PC market, they are also targeting the server market. This is a big revenue generator for Intel. Most servers on Earth are running on Intel processors. And for a while now, even companies like Amazon, Microsoft have been building their own ARM chips for their own servers. This is only going to be exacerbated by Qualcomm coming into this market. Intel was already competing with AMD in this field. And even nvidia is working on their own processors for servers. There is not the end of the road for Intel, but there is going to be more and more competition. Although we said a lot of negative things about their foundry business, I believe in the future that their foundry business is going to be the core of the business, because they are losing market share in any other product that they have. They are going to become a foundry business where they just build all these chips for others. I read that they've already started even building ARM chips that are literally competing with them. They are building for some of their customers. I see the company becoming that, but they still need to deliver. Building all these factories in Arizona, Ohio, and all these places has been a challenge for them. So to me, there's more pain ahead. I'm not recommending this stock, but it's not financial advice.
On my side, what I would say first is that if you were to take out the political element out of this whole Intel thing, tomorrow Intel is bankrupt, is finished. They can't do anything. They will be out of the way. That's clear.
Right.
But now you have the political element, which is the fact that the US knows that AI is going to be big in the future, and they want to bring all those manufacturing capabilities from Taiwan, China to the US. And because of that, they are treating all the companies that, manufacture these chips as American heroes, and they are throwing money at them. And that's how lucky Intel is at the moment. Because on their balance sheet at the moment, I believe they have around 25 billion on their balance sheet. And that's literally the money that you need to build, I would say, one fab. But now they are building, I think, 5, 6, or even 7 in the world. And that's all government money. Because of that, they are going to be in the game for a while. And as I dare say, they are likely to become a foundry business where they will just be manufacturing chips for companies. So if you are in this for the very long term, if your game is you are an investor for the very long term, let's say 15 years, you can buy this stock, I would say. But if you are in it for 5 years, I promise you that in 5 years, Intel's issues are not going to be over. There's going to be a lot of up and down.
Yes.
There is a lot of catching up to do. I would say in 10, 15 years, that's when you can make some money out of Intel. That's it.
If you like this video, please remember to subscribe. We appreciate you for watching the video. Thank you.
Okay, guys. We've been working very hard on this AI-backed platform that enables individual and professional investors to query 10K, 10Q, and earning call reports. And this platform is set to revolutionize the way you invest in stock, as it is going to enhance your efficiency thanks to the AI that will quickly process and analyze the vast amount of data in these financial reports, and also highlights the trends, enabling you to make a better decision regarding your investment. And as a matter of fact, all the insight you will see in this video was gotten from this platform. So currently the platform is at a beta version, and we are looking for investors to try it for free and provide us with feedback. So if you are interested, please subscribe to our Substack. The link is in the description, and thank you very much.